Another disappointment today over China and what we've heard from the property sector there, Paul. What can you tell us?
So I'm not sure why the market keeps doing this to itself, but it seems each time we get news of a new briefing, there's a little bit of excitement, some premium built into the market, and then the details that we hear tell us not a great deal that's new, and the market kind of gives back those gains. So that's what we saw in trading today in China's market. True, expectations have been stoked a little bit by local reports that have been talking about some double punch combo that was going to be good news. But that expectation, that we have in the market, again, kind of not fulfilled. I think what's really interesting is there's sort of two tiers of investors here now. Those that got in early, that maybe longer term are still in the money, but those Johnny-come-latelys, those that joined the ride late on, have lost money by being too slow on the moves, and the market has come back off again. They're ruining coming in, and we had some delicious reporting today from the retail sector about everybody getting very excited over the holidays, opening new accounts, and then, alas, everything turned against them, and they're closing down those accounts again. So that sort of fast money, not really seeing many gains, but there is a longer-term cohort that's hanging in there and feels that longer-term momentum can still reap rewards if you bide your time.
Can we expect any surprises out of Slovenia today? Can we expect any surprises out of the ECB? What's the market position for? This feels very consensus that we're just going to get 25 and a point to 25 in December.
That does feel very consensus. I don't think that anybody's really expecting them to go harder with a 50 basis point move either. I do think that longer-term outlook is a little bit less certain, though. While the window is open for central banks all around the world to be cutting, we saw that in Asia yesterday with Philippines, and a surprise from Thailand as well. We'll see it from the ECB today, most certainly. When we get to the US elections and the volatility that causes, and then whether the Fed continues to keep on cutting, could give other central bankers that pause, especially if we get a much stronger dollar, meaning weaker currencies for the rest, that suddenly makes cutting interest rates and seeing their currencies fall even further more of a risk for them to take into consideration. So something to watch out for the longer term, what that constellation looks like.
Paul, 30 seconds on the clock. Are we seeing elements of a Trump trade or a Harris trade?
It feels to me like the market has swung decisively this week in favor of a Harris defeat, maybe would be the way to put it, or a Trump victory. We're seeing that premium in options trades now. People piling into UN puts, looking to profit if the Chinese currency weakens. Same if the Australian currency weakens. People buying up Bitcoin. So market, as Stan Druckenmiller has been saying, seems really convinced now that Trump is going to win.